Hello everyone and welcome back to the channel. Now in this video we are going to be going over another update for my ISA account, my £40,000 ISA account. Before we get into this video, if you could please hit that like button for me, subscribe to the channel if you are new. I appreciate the support on my first few videos. Going to continue doing multiple videos a week and getting more active on here also as I do my massive investment into the dividend portfolio. With that being said, let's go ahead and jump into the ISA account. So as you can see, we're currently sat at £18,167.87p, down about 2.9% or £557, which again, I'm not concerned about in the slightest because this is my long-term account. This ISA I'm not planning to cash out for many years. However, if you're wondering why I claim this is a £40,000 account, as you can see up here, my account value, you can see we have about 40,000 in here. Now, again, that's because I've maxed out my ISA this year, and I also maxed it out for last year, and that was the first time I have invested in an ISA account. I'm 21 years old from the UK. I own a business over here. That's why I'm able to invest this amount of money, and extremely grateful for that. However, yeah, we maxed out the ISA for this year, and in April next year, when the new financial year starts, I'll be doing the exact same, doing a lump sum of 20k and then dollar cost averaging that over the year. But let's go ahead and show you where we're at with the account. So we've currently hit 5 p.m, which means I'm not able to do which means the market's closed, so I can't do another investment. I did forget to do my £180 investment for today. However, I am going to do it live in the video with investing £180, which of course we'll go through tomorrow at 9 a.m. So if we take a look over the last week, then you can see that we started on a pretty rough patch, down over 5%. Then we had a nice increase here of just down 2.58%. Then again we came up, and now we're sort of the highest we've been, only down 2.98%. So yeah, it's pretty nice to see that over the last month we can see the portfolio has grown quite a bit, but that's because I am investing about £180 per day, and the reason I'm doing that is because I want to get rid of these free funds and get them invested. Now what that means is that, as we know, the new financial year starts on April 6th. So what I've calculated is the amount of trading days that we have available to us until then. I need to dollar cost average around £180 per day to get these free funds down to zero to start the new year fresh with a set of 20k. So over the last month, again, we did start the month up about 2% here, and then of course we have had a turbulent month in the markets. Now with Liz Truss resigning today, that hasn't actually caused too much of an upset with the FTSE. If we go over here, you know, we're actually up about 0.13%, but it'll be interesting to see how we end off the week tomorrow, and it may be a good time to dollar cost average tomorrow, which I'm going to do anyway because I do that every single day. So let's go ahead and take a look at our stock investments. So iShares Global Clean Energy, over the last month we are down 16%, 1 week we're up 0.26%, 3 months down almost 5%, 1 year down almost 8%, and maximum we're up quite a bit, and you can see this all-time high. It looks very nice. However, you can see we're kind of on this downtrend right now, so it's probably, again, I'm going to keep dollar cost averaging every single day and keep maxing out this ISA every single year for as long as humanly possible. iShares Global Water then, IH2O, we are down today, but we're up over the last week, and we're down the last month, down 3 months, down over the year, and up massively since this started back in 2020. iShares Gold, yes, I own gold in this portfolio, but again, I'm 21 years old, so these are all for the future. You know, this is all for future me, 20, 30, 40 years time when I look at planning on retiring. You know, this is what I'm looking at, you know, this ISA as it compounds over time, as I can continue to contribute 20k a year or whatever the limits become, then of course this should look pretty nice. So FTSE 100 then, over the last week we're actually up, month down, 3 months down, and year down. Of course the stock market hasn't had a good year hasn't had a good year, right? So all world high dividend yield, we are up over the last week, down over the last month, down 3 months, but on the day we are also pretty much break even, which is nice to see. We did have this massive spike up, actually this was quite weird, and then we came down from there. Emerging markets, again, today we're up, last week we're up, month down, 3 months down, year down, and all time we are down actually. And the S&P 500, which over 50% of everything goes into the S&P, over today we're down slightly, week we're up, month we're down, 3 months we are pretty much break even, and 1 year we are up slightly or break even again. So if we take a look at the pie here and my holdings, you can see how much everything is weighted. So S&P, again, 50% goes to that, 10% goes to global clean energy, 10% goes to FTSE 100, 10% goes to FTSE All World High Dividend. However, there is only 4% there right now, and the reason for that is because I recently added this into the portfolio maybe over the last few weeks. So that's why, as I'm dollar cost averaging, this will essentially get back up there. I could go ahead and rebalance it, which again would sell a lot of these shares. It would sell 136 of S&P, £5 of gold, 468 pounds of emerging markets, and 600 pounds of global water, and would buy these shares, as you can see. However, I'm just going to keep it how it is and keep going. 5% to 12.6% to the emerging markets. Again, I did have this weighted higher, that's why there's more percentage allocated there. And then I added in the all high world dividend, so I had to lower this percentages and the global water one. Physical gold 5% and global water 8.6 out of 5%. So I should really rebalance that, but I'm not going to. I'm just going to keep dollar cost averaging. So that is how my portfolio is currently looking like. And yeah, we're down, which again, I'm not too annoyed at. As you can see, around these all-time highs, let's see where I was up. I was up about almost £1,000 at one point. Yes, here it is. I was up about £969 back in August. However, again, this doesn't really concern me too much. These are long-term gains, and I'm aware that the market is down and will probably continue to be down because of the current economic stuff going on. Energy crisis, you've got cost of living crisis, and a bunch of other stuff turbulent in these markets. So I'm going to go ahead and set my dollar cost average for today, tomorrow, which again we'll go through at 9 a.m. tomorrow. And then what I'll do again tomorrow as well is dollar cost average another 180 for tomorrow's dollar cost average later on in the day. So there we go. That is going to go ahead and set those orders and buy that early morning when the market does go ahead and open. But that is going to be it for this video. If you have enjoyed it, again, please hit a like, subscribe if you're new, and turn the notifications on so you don't miss a future video. Thank you for watching. Let me know down below how I can improve these videos. With that being said, I will see you on my next one. Maybe I'll do a video in terms of why I've picked these as well in more depth. But I mean, you can probably understand why I've got over 50% to the S&P 500. It's the total, US stock market, top 500 companies. So it's a pretty risk-free bet there, in my opinion, long term. I mean, if the S&P 500 goes down, massively, or goes to zero, we've got a lot more worries. A lot more things to worry about than the S&P going down. I mean, this is literally the total US economy. So if that happens, the world is screwed. So I'm not too concerned about that. But yeah, again, thank you for watching, and I'll see you in the next video.